Hello all dear friends, welcome to the Binary Wins channel. I'm with you with another series of trading videos using Candlestick Psychology tips. I want to make a few trades on the IQ option broker and review a series of tips and patterns together. So let's move on to today's interesting and practical video. Dear viewers, before starting the video, if you would like to support me, please like the video, subscribe to the channel and share the channel link with those who are interested in professional activity in the binary options market. Also, to start your activity in this market, use the registration and login links in the video description and receive a 50 to 100% initial bonus to start practicing and trading. So, we are on the AUD-CAD currency pair in the OTC market. The candlestick time frame is 1 minute and the trading time frame is 1 minute floating. Look, our trend is an uptrend. If you look closely, it made a low, high, higher low, and higher high for us. So, our major and minor trends are bullish. The red candlestick is almost covered between the two green candles. I entered the higher trade, but my entry point is not a good entry point. I entered the higher trade in the direction of the uptrend. The red candle is between the two green candles and is engulfed by the green candle. Our trend is also an uptrend. Here, a chair pattern has formed for us, which I have already explained in detail. That's why I entered the higher trade. Great. I entered the higher trade again. Again, my entry point is not a good entry point. Green candlestick has formed a new high for me. My trend is an uptrend. There is a possibility of the next green candlestick forming. We wait for the trade to close. It's okay. I entered two lower trades. If you look, the red candlestick has made a lower high than the previous candlestick, so we have sellers here. Also, the red candlestick has made a lower low than the green candlestick. There is a gap and distance to the next level. See, we have a gap here. That's why there is a possibility of a red candlestick forming. Okay? Excellent. If you look, there is still a gap and distance to the level. But look at the shadow of the candlestick. If you look, the shadow of the candlestick closed exactly on the level and received pressure and rejection from the level. That's why I didn't trade. See, the next candlestick turned green. I entered a lower trade because of the weak green candlestick formation after two strong red candles and the gap and distance to the level. I entered a lower trade. See, our green candle is a weak candle that has pressure and rejection from above. So, we have sellers in this area. And the probability that the next candle will be able to cross this trend line is low. That's why I entered the lower trade. Okay? The opportunity for the next sell trade was lost. I entered the higher trade with a margin of safety. Why? Look, as I explained, our trend is an uptrend. We have a fresh level here, which in the past has prevented the candles from moving lower. The retracement trend reached our fresh level and received pressure and rejection from it. See, I waited for the first candle to go down, get through the rejection level, and then I entered the higher trade. So, as you can see, the first green candle filled the gap and the distance to the next level, and then I entered the higher trade. I entered the higher trade again. This trade is a bit risky because we still have some gap and distance to the level. But on the other hand, we have a bullish golden area here, which after the formation of the green candle, I entered the higher trade. I expect the next green candle to form for me. It's okay, there was nothing left. We're waiting for find the next position. Let's take a look at other currency pairs. If you pay attention, we have a bad market in this currency pair and we should not trade here. I have already given you full explanations about bad market conditions many times in different videos. We also have a bad market in this currency pair. My dears, do not forget that no pattern, method, or a strategy works in a bad market. That is, you are doomed to lose in a bad market like here. That is why you shouldn't trade in bad markets. I entered 2 higher trades. If you look here, we have a candlestick pattern. See? 1, 2, 3, 4, 5, 6, and 7. A 7 candlestick pattern has formed for me. The 6th candlestick has made a higher low than the 5th candlestick. That's why I entered 2 higher trades by forming a 7 candlestick pattern. Great. I entered a higher trade. Look. Our trend is an uptrend, right? So, we followed the first principle, which is to trade in the direction of the trend. Next to that, here, we have a bullish golden area, which after the formation of the green candlestick in the golden area, I entered a higher trade. That is, I entered the trade in the direction of the trend. Great. Excellent work. I entered a higher trade again. If you look, as I explained, we have an uptrend. Okay, here we have a bullish momentum. The last candlestick has formed a new high for me. There is a gap and distance to the next level. That's why I entered a higher trade in the direction of the trend. Okay, my dears, don't forget that candlestick pattern requires a lot of practice and repetition in order to fully understand and master the patterns and behavior of candles. Candlestick psychology can be useful for you aligning with any strategy, indicator, and method and help you identify the right positions. If you liked the video, please like it, subscribe to the channel, and send the channel link to your friends. To register, you can use the registration links below the video and receive a 50 to 100% bonus to start practicing and trading. Don't forget, you are the best. Take care of yourself. Until the next video, bye.